All right, guys, welcome back to. All right, guys, welcome back to the channel. So today is gonna be episode 158. I'm gonna take you guys on a little drive with me. I gotta go drop a blanket off at my daughter's school, and then I'm gonna head to the gym for like my afternoon session. Probably get a little bit of cardio in, and touch a little bit of weights. Probably do some bench pressing. All right, so expanding on what I covered in previous episode, I think it was episode 155 or 154, about setting up your long-term investing. All right, so today we're going to take a look at what I like to call the 50-50 split. And this is something that you could tailor based on your level of risk. All right, so your level of risk is really going to be based on how much time you have before you want to retire. You know, if you're 20 years old, you could take a lot of risk. You know, if you're 40 years old, it might be a little bit different for you. All right, so just to talk to you guys real quickly about long-term investing, what you are doing with long-term investing is you're putting away money for the future. All right, so you're putting money away to make sure that your future self is good. You know, you're able to live a certain life and, you know, spend a certain way and not necessarily have to worry about your finances when you get up in age. All right, but it is exactly that. It's long-term investing, so it's something that you're gonna be doing for probably, I don't know, 20, 30 years, depending on your goals. And with that in mind, what I want to stress to you guys is you don't want to put yourself under a lot of pressure to invest long-term. All right, it should be effortless. And I told you guys in a previous video, probably the best way to do that is to look at your expenses, right? Look at what your daily spending is and see what you could cut out. You know, if you could cut out lunch, you'll be good. The average person probably spends $20 or more a day on lunch, you know, times 5, meaning 5 work days. What is that? $100. You know, and you could see how that snowballs. But the method that I want to talk to you about really involves a couple main different methods. All right, so the first thing you want to do is automate your investment. You want to make it something, like I said, small enough to the point where you could live with it. I would just cut out some other expense that I already have for the day and take that money and start investing it on a daily basis. Now, you could do it weekly, you could do it monthly. I like daily because the amounts are small and you really don't miss them and they snowball over time. All right, so first thing we're gonna do is we're gonna take a look at, say, probably what, like $60. So we're gonna see if we can manage to save $60 a day. All right, Monday to Friday. So we're gonna be looking at taking $60 out of our account every day, you know, taking it out of your bank account and automatically put it into your investing account, and we're pretty much gonna split that in two. So this is what I call the 50-50 method. So the way this method works is you wanna be putting $30 in something that's stable, gives you some good return, and possibly pay you some dividends. If you're into dividends, you could get something like SCHD. You know, if you don't necessarily care about dividends and you just want something that gives you like a nice, safe return, you could put it into something like SPY or QQQ. All right, so that's going to cover the first half of your investment. The second half of your investment, you want it to be more risky, meaning, as an example, SPY will give you 20 to 30% a year on average. You know, over 10 years, the numbers drop a little lower. Sometimes it's like 10% a year, 9-10% on average. But it has years where it goes much higher than that. But that's, say, the average. All right. Now, if you're putting up $30 a day times 5 times 5 threes, so you're looking at, what is that? So $30 times 5, you're at $150 for the week, right? Times 4, you're at $600 for the month. And that you're putting that into SPY, $600 a month times 12, you're gonna be somewhere around the neighborhood of $7,200. So you're looking at $7,200 a year putting into SPY, just $30 a day. The next $30, I would put that into something more risky. All right, so something that gives you good gains. It could be something as risky as like tech, you know, but like something more stable. So maybe you want to put $30 in Nvidia. That, I think, it's super risky. Or Tesla. That's another super risky thing. But you could go with something more stable like Google or Microsoft or Meta. And the reason I say those companies all over the last couple of years have been returning about 40 to 50% a year on your investment. So if you were to put the same $20, right? If you were to put the same $20, $7,200, you know, times 0.50, you're making $3,600 on your investment in something like Meta or Microsoft or Google. You know, those companies, they're risky, but they're not as risky as, say, something like, I don't know, crypto. You know, you could put that same $30 a day into something like crypto. Now, the reason why I say all of this is going to be based on your risk tolerance, and your risk tolerance really should be based on how much time you have to retire. So if you're 20 years old and you could put $30 a day into XRP or into Bitcoin or whatever, go for it. You're 20. You know, if you're 40 years old, I would go with something a little less risky. Still going to give you some good returns, but those companies are more stable. You look at companies like Microsoft or Google, they're all multifaceted companies, meaning they have a bunch of different products and services that they offer. The chances of a company like that going broke, it's going to be very slim, versus something like XRP. I know people are saying, oh yeah, the technology behind it. I mean, I don't really know what's behind it. I just hear what everybody else is saying. You know, it could go belly up, but the chances of you getting a much higher return than 50% on XRP is obviously going to be greater. So the other half, in short, should be into something more risky, but it should be based on what type of risk you could tolerate. The younger you are, greater the risk could be. The older you are, you want to keep the risk a little bit lower. All right, there's nothing wrong with getting good returns from something like, you know, Microsoft, Google, Meta. Those are the companies that just come to my head. You know, I did a video a couple episodes back which shows you guys how to find stocks that return about 50% a year. You know, you could go through the same process and just look up stocks and try to invest in something that you know you have some general knowledge of. All right, so don't go investing in things that you have no idea what it is. All right. Another risky item would be those quantum stocks. Those quantum stocks are going crazy, you know, but they're very risky. A lot of these companies are not even profitable. So it really just boils back down to what risk you're willing to take. But that's how I would set it up. I would put 50% of whatever money that I'm investing daily into something that's stable with a low, steady return. Like I said, SCHD, SPY, QQQ, whatever it is. All right. And then the other half, I would put into something a little bit more risky. So that way I could get, you know, my 7,200 on the risky side could get 50% a year. And my, you know, my more stable 7,200 a year can get anywhere from 10 to 20% on something like SPY or SCHD or whatever stable stock that you choose. All right. But that's it for the video today, guys. I hope you found this information useful. If you did, please consider subscribing. I make new videos like this, dropping gems that you could use along your investing journey. Please go ahead and like this video, but more importantly, share this video with a family member or friend. If you're considering trading alongside me, you could do that. There's a link in the description to my group chat. It's $9.99 a month, and I drop all my plays that I'm considering, and once I get into the play, I post the screenshots, and I also post the strategies leading up to the play. Thanks again for watching the video, guys. I do appreciate it. Y'all stay safe and have a blessed day. Peace.